Hey, what's going on there, YouTube? Mr. Matt here with Mr. Matt's 5 Minutes of Finance, where we help you along on your journey to financial freedom 5 minutes at a time. Today, I want to answer a question from a subscriber who asked, what is the difference between term life and whole life insurance, and which one is better for you? Before I get into the definition of those and tell you which one I think is better, I want to offer this caution ahead of the definition. And the caution is this: you should be leery of anybody who is bringing something to your attention that you should purchase where it's not something that you were seeking out. Whether that be sharp knives with ivory handles, a $1,000 vacuum cleaner, or a timeshare in a place where you vacationed recently. All of those things that come into your atmosphere that you didn't seek out are things that are going to be hard sold to you. So understand that first as we talk about whole life insurance and term life insurance. So what is term life insurance? Really, as its name suggests, it is like renting insurance. So it's life insurance that you get for a term or a period of time, which could be 10 years, let's say. And if you buy it in your 20s, so let's say you're 29 and you're interested in a $500,000 life insurance policy, it'll be pretty cheap, probably cost you about $30 a month. Versus whole life insurance, which is going to be good for your whole life. You buy into it and they call it an investment because it has a cash value associated with it. However, because you are going to put in pretty much a good amount of whatever that output is going to be at the end, it's going to cost you more. So instead of $30 for a $500,000 policy at the age of 29, you might be paying $70 or $80 a month for this $500,000 policy. And again, they say there's a cash value associated with it. However, there are a lot of fees associated with it, and the return on investment in this investment is really low, probably about 2% over a 20-year term or a 20-year whole life policy span. Now, the fact of the matter is this: that whole life policy is really for the top 1%ers. It's really not for the average person. So if you are a person who has not yet maxed out on their 401k, $19,500 for calendar year 2019. If you have not maxed out on your Roth IRAs, if you have not maxed out on all of these other investment instruments that, one, pay more than a whole life policy will pay, and two, offer similar tax benefits, then the whole life policy isn't for you anyway. So don't consider it. Don't consider it if you've not maxed out on every other possible thing. The reason it's for the 1% is because their income is so high, even after they've done those things to the max in terms of sheltering their income from taxes, they are still looking for other vehicles to put their money to shield it from taxes. But for most people, you still have a lot of opportunity to do things that give you greater return on investment and that give you more access to that money. If you decide to get your term life insurance, which I encourage you to do if you need it, and then put the difference in, maybe a term life insurance policy costs $30, a whole life insurance policy costs $80. You take $50 a month and decide to put that toward an index fund, or again, toward your 401k or some other instrument. You will likely have that same amount of money in 30 years anyway. And if you miss a month or 5 or 6 months of payment to that, there's absolutely no penalty associated. You don't risk losing your initial investment. So generally speaking, for most people, term life insurance is the way to go. And so don't over-insure yourself. You don't need $1 million policy if you're not married or you don't have a significant other, you don't have dependent children. You don't need a whole lot of insurance. You really need about enough insurance to just bury yourself so that your folks that are behind don't have to come up with a fried chicken dinner sale in the neighborhood to be able to cremate you or to put you in the ground if those are your wishes. So really, I have to say, avoid the whole life policy. Don't talk to the person who's bringing it to your attention to ask them about what the benefits and virtues are of it. That would be like going to a car dealership and asking them about public transportation. No, because they're going to tell you everything that's good about that, and they're not going to give you a balanced view. The chances are real good that if you're in your 20s now, by the time you're in your 50s, you would have had a nest egg enough to leave behind for those loved ones. Your house will likely be paid off such that insurance will not be that much of a concern. Until next time, like, comment, subscribe, share this video. Please take care of yourselves and your financial futures.